Krish, you obviously think that this will be short-lived. This too shall pass.
Yeah, I mean, we actually do believe that. I mean, what you're seeing today, and since Apple's pre-announcement yesterday, was the fact that, you know, a lot of it is, besides demand, it's really supply chain disruption. And it's taking a while for the supply chain to ramp up. And from our checks, it seems like the facilities are beginning to open in China, which is a positive, but at the same time, you know, the virus is still a threat, and people are being very cautious. So it's really a ramp effect that's going to play out over the next month or so. We assume that the supply chain is at 25% utilization rates. Probably will take end of March, which is the end of the March quarter, to get to like 100% utilization rates, and that adds a double whammy from the fact that there's some slowdown in demand, but really it's more of a supply impact too.
Krish, we got some revenue guidance, of course, from Apple saying that they would miss on the top line. Fold that into your estimates on the bottom line. What's changed for you?
Yeah, that's a good question. So first and foremost, Apple did not give quantifiable guidance on what March quarter is going to be. So we looked at our numbers and took a cut based on the biggest impact is going to be on the iPhone, because people do end up buying it's a physical product, unlike a services download in an app store. So that was like one of the biggest reasons for a big cut. It does impact gross margin a bit, but where we were actually more conservative was on the OpEx side, because Apple has said that they're going to invest in the modem business, which they bought from Intel end of December. They're also going to be investing in TV Plus and other opportunities. So effectively, when we cut our March quarter numbers, our sales, we cut by about 15 or 16%, but EPS was down by almost 25%, from like a little over $3 to from 303 to like 224, mainly because I think the OpEx is going to stay high because they're going to invest in future opportunities, despite the top line being impacted because of the virus.
Other analysts have pointed out it's basically impossible for Apple to diversify their supply chain. Has this highlighted how overly dependent they are on China?
It's a very valid question. It's something that investors have been asking, and you know, Apple clearly seems over-indexed to China on the supply side. The one thing I'd point out is they've been trying to diversify. Foxconn has a facility in India they're ramping up. These things take a long time. You know, it's very easy for us to talk about it and figure it out, but the practicality is like moving a supply chain, moving the logistics, and trying to do a copy exact phenomena takes a long time. It's not overnight or a fortnight endeavor. It takes a year or two or so. So I can see them moving over time, but it's not going to change the dynamics in the near term.